Give a brief introduction about our speaker of first topic. Practical aspects of issue and allotment of securities or shares under the Companies Act 2013. We have CS Vivek Hegde with us to give a brief intro about him. He is a fellow member of Institute of Company Secretaries of India and also a cost and management accountant. He is practicing company secretary over 10 years of experience, which also include company law and FEMA. He was the chairman of Bangalore chapter of ICSA for the year 2020-21. He was also part of working group of the ICSI on drafting revised guidance note on SS1 and SS2 in the year 2020. I request our managing committee member Manjunath Hallu to kindly present him a floral bouquet and welcome him. Big round of applause. Currently, he is also member of Editorial Advisory Board of Monthly Journal of ICSI, Chartered Secretary. With this brief introduction, I wholeheartedly welcome you for today's program, sir.
Thank you so much for kind introduction, and all the dignitaries and Chairman Srinivas sir, Sajivan sir in absentia, and all the management committee members and all my chartered accountant friends here. Very good morning to one and all. Yeah, my session had to start at 10. Of course, because of the inauguration, there is a delay of 30 minutes. Of course, I am not in a hurry. So as ROC sir rightly mentioned, we have to do a threadbare analysis. I don't mind skipping few slides, but whatever slides I cover, let us do justice. Is that fine? Yeah. Yeah, ROC sir, of course, it is worth it. Whatever we have to hear from ROC sir, it was worth because he has sensitized on various issues which is happening in the current scenario. And he has also cast some responsibility on the speakers also, including me. So he set the tone. Before I start the topic, yes, few points I would like to bring it to your notice, because this being a first technical session of today's seminar, let me take a very few minutes to touch upon a few aspects which ROC also mentioned. Yeah, for a chartered accountant, also some chartered accountants are practicing in Companies Act. So on that front of view also, it is very important that these provisions are understood and followed in letter and spirit. That is very important. On top of that, one more important thing is CARO. CARO is the talk of the day because of the implementation of new CARO 2020. There are various disclosures, and one disclosure which I wanted to highlight, which is very important as a statutory auditor, why it is important. So that's what I wanted to highlight here. Yeah, there is a separate disclosure under CARO. I'll just go through this clause, which is very important. This is what you have to certify. So that's why the provisions relating to issue and allotment of securities is very important. And as he cautioned, any lapse, whether minor, major, any lapse in the compliance of Section 42, especially the private placement, is having a severe consequence. That is why it's very important to know. So this clause says you have to say whether the company has made any preferential allotment or private placement of shares or convertible debentures fully, partially, or optionally convertible during the year, and if so, whether the requirements of Section 42 and Section 62 of the Companies Act 2013 have been complied with. This is what we have to state. And next, and the funds have been used for the purpose for which funds were raised. In the private placement documentation, there is a purpose we have to mention, object of the issue we have to mention for what you are raising the money. So that also you have to certify that the funds have been used for that purpose for which it is raised. If not, provide details in respect of amount involved and nature of non-compliance. So this is what the disclosure which you have to make in CARO. That is why this is very important. If there is any allotment during the year of your audit, the provisions of the Section 42 and Section 62 with respect to this, you have to see, and we have to see that those provisions have been followed in letter and spirit. Any deviation, it is a reportable violation. Okay, this is what I want to stress upon here. With this, let us move to the topic. As I said, the time which is available for me, within that whatever I can cover, I will cover. So mainly I want to cover rights issue and preferential issue, private placement. These are all the main provisions under Companies Act as far as issue of securities are concerned. Sweat equity, ESOP and bonus issue, though I have put it, I may not be able to cover it because of paucity of time. Let us cover these first three. And as far as the provisions are concerned, yeah, he was mentioning there are many such orders which ROC has passed of late as far as violation of Section 42 is concerned, as far as private placement is concerned. So penalty is very severe. On top of it, he was telling we have to refund the money collected also, that is with penal interest. So these are all having very, very severe consequences. Of course, these provisions, I cannot confidently tell that these provisions are crystal clear. Any law for that matter, there will be, if three professionals interpret a provision, there will be three different views. And that particular professional will interpret in a way which suits his requirement or which suits his client's requirement. So that's why these provisions always will have a gray area. So always it is better to err on the right side. Though, suppose let us, I'll just go to that. It says company should keep the money in a separate bank account as far as private placement is concerned. The question comes, should we open a separate bank account and keep, or if there is an existing account, can we use that for keeping that money? So these are all the two arguments. If you ask ROC, he will say, no, you have to open only. Okay. He say, if you're not open, then he may say, there are other entries in the bank account other than this. So this is not the compliance of the section. So always it is advisable that even if it takes few extra efforts, open a separate bank account and then take money under private placement. You cannot just take the comfort that anyway I have an account which I am not using. I have hardly done few transactions. I will take money in that. It is not saying you have to open a separate bank account. So that argument may not satisfy the ROC. It may satisfy us, satisfy our clients, but not the ROC. So that's why let us err on the right side. Even if it takes few extra efforts, given the provisions, penal provisions which are there in the private placement provisions as such. Okay, so let me start with the rights issue. If you have any questions, you can pause and you can ask in between also. As far as rights issue is concerned, there is no word rights issue is used in the Companies Act. It is by practice, we have been calling it as a rights issue. As far as section or provisions are concerned, nowhere the word rights or rights issue is mentioned. So this is, I would say, a simple way of issuance of securities compared to private placement and preferential allotment, where severe penalty provisions are there. Under this section, comparatively, the penal provisions are less severe. So that's why many people want to do the allotment or fit that allotment into rights issue mode. That also I'll tell you how regulator may view it. Okay, so let us get into the section 62, which is the mother section, we call it, as far as issue and allotment of securities are concerned. So section 62, subsection 1. So under subsection 1, there are 3 separate categories, A, B, and C. So under section 62, subsection 1, it says where at any time a company having share capital proposes to increase its subscribed capital by issue of further shares. So I have highlighted increase its subscribed capital by issue of further shares. So why I highlighted is, it says shares, further shares. So it is not saying securities here. It is saying shares. So shares means there will be some arguments. Can we do rights issue for debentures, CCDs? Can we do rights issue? There will be some discussions on that. So here it's very clear. This section can be used only for shares. Shares can include equity shares as well as preference shares, but not the debentures. Okay, so that's how it says. Such shares shall be offered. So this is the condition. First condition, if you want to increase the subscribed capital by issue of shares, further shares, such shares shall be offered. This is the wording used to the persons who at the time of the offer are the holders of equity shares. Here also I have stressed upon equity shares. So rights issue offer can be made to only equity shareholders. Even if you are issuing preference shares, that offer should be made only to equity shareholders, even though there are existing preference shareholders. So that is what I have just highlighted this equity shares here. So to the persons who at the time of the offer are holders of equity shares of the company in proportion as nearly as circumstances admit, to the paid up share capital on those shares by sending a letter of offer subject to the following conditions, namely. So you have to, if you are issuing equity shares or preference shares, you have to offer it to the existing shareholders, existing equity shareholders in the proportion of their existing shareholding. That is the rights issue. The first provision says, of course, there are conditions. We should send a letter of offer. That is the requirement. Next, there are conditions for rights issue. The offer shall be made by notice specifying the number of shares offered and limiting the time not being less than 15 days or such number of days as may be prescribed. This as may be prescribed, 15 days has been reduced to 7 days now. In the recent amendment, just 6 months back, there is an amendment. So 15 days, now we can read it as 7 days. So minimum offer period is 7 days, not exceeding 30 days. Maximum offer period is 30 days. This time limit should be mentioned in the offer letter. So from the date of offer within which offer, if not accepted, shall be deemed to have been declined. So as far as offer letter is concerned, because sometime what happens due to hurry or client pressure or whatever, we end up, what is required for allotment? Oh, we have to file on pass 3 so that MCA will show the updated capital. We have to receive the money. So that much will be ensured. Then, okay, other documentation of husband and wife company, close friends, we will do it later. We will see when it comes, when somebody asks. So that should not be the case. As Arosli rightly mentioned, whenever you are doing work, it should be a thorough, even whether ROC is asking whether something to be filed with ROC or not, even for internal records. So in these slides I have offer letter, it should be sent to the existing shareholders. As far as the format of letter is concerned, there are few things which need mandatorily to be mentioned as far as the section is concerned. It is specified, number of shares and the offer period, and there are other clauses which should be mentioned, 2, 3 clauses. Other than that, there is no format of offer letter is prescribed for rights issue. Unlike private placement where offer letter is prescribed in form PAS4. So rights issue, there is no format as such. We should see that mandatory disclosures which are mentioned in this section, it is covered. And also on top of it, there are few additional things to suit the requirement we should mention, and we should send the offer letter. Okay. So first clause is clear. So this is mentioning about what has to be mentioned in the offer letter of rights issue. It should also make a statement that if you have not responded within 30 days, or if you say my offer period is only 15 days, whatever you mentioned in the letter, within that, if you have not responded, we assume that you have declined the offer and you are not interested in accepting the offer. That is the provision. Next, unless articles of the company otherwise provide, the offer aforesaid shall be deemed to include a right exercisable by the person concerned to renounce the shares offered to him or any of them in favor of other person, and the notice referred to in clause A shall contain a statement of this right. So this is one statement which should be mandatorily mentioned in letter of offer. So the shareholder, equity shareholder to whom the shares are offered, he will have a right to renounce it to a third person. If he is not interested, he can say, I'm not interested, I'm offering it to Mr. A. So there is an argument in this, lot of arguments, lot of deliberations in the professional forum. Can that third person to whom you are renouncing the offer, can he be a third party or he should be an existing shareholder? That was the point of debate. Even today that debate is there. Can he renounce the shares to a third party? Hopefully a party, a competitor or whoever it is. So as far as my view is concerned and as far as settled position is concerned, ROC may not agree if I ask. But settled position is, yes, it is possible. He can be a third party, a non-shareholder. He can be a third party also, because it says any other person. It is not saying existing shareholder. Okay. So that, yes, please. Yeah. Yeah. Exactly. As per the section, 15 days only. Such a lesser number of days as may be prescribed is prescribed in the rules. So that lesser number of days which is prescribed is 7 days. Yes, yes, it is there in the rules. Okay. So in the Companies Act, that is how it is. There was a count earlier. As may be prescribed, how many places in the Companies Act is mentioned. That means all this as may be prescribed will be prescribed in the rules. Okay. So now rules are bigger than the provisions act. That is how it is. It is the common scenario everywhere. It is not only the Companies Act. Okay. Clear? Yeah. So second provision is talking about right to renunciation. It should be mentioned in the letter, and the existing shareholder will have a right to renounce the offer made to him in favor of a third person. Okay. Next. After expiry of the time specified in the notice aforesaid, or on the receipt of earlier intimation from the person to whom such notice is given that he declines to accept the shares offered, the board of directors may dispose of them in such manner which is not disadvantageous to the shareholders and the company. In the rights issue, this is also one of the praise which I have highlighted, is debated. So shares are offered to me as an existing shareholder. I say I am not interested in accepting the rights. So when you do that, when you decline the rights, then board will have authority to dispose of those shares in such a manner which is not disadvantageous to the shareholders and the company. That is what it says. So disadvantageous to the shareholders and the company means what? Of course, if the board disposes of those shares to a third party investors who are not existing shareholders, definitely it will be disadvantageous to the existing shareholders because their shares will get diluted. Is it not disadvantageous? It is disadvantageous. And if those shares are disposed of to some section of people who are competitors or which will change the control of management, will that be disadvantageous to the company? So these are all the point of argument. As far as existing shareholders are concerned, though it is disadvantageous to them because of dilution of their shareholding subsequent to the issue of shares to third parties, it is by their own conduct. They have only declined. So they have accepted to that action. So in that sense, we cannot say it is disadvantageous to them. So these are all the things which is little gray, as I say. These are all the things which we say people can interpret either way. So some people earlier, when this provision were implemented in 2014, this rights issue route people used to follow even for VC investment also because of the ease of doing. But of late, because of the risk involved, and the interpretation issues and all, now it is private placement only. Even law firms were insisting for it. So that's why this phrase disadvantages for shareholders is, again, it's the board should take a call. Board should have reasonable grounds. Explanation should be minuted in the meeting of the board why they decide or they conclude that it is not disadvantageous to the shareholders and the company before offering it to third parties. Okay. So this is as far as the provisions of rights issue are concerned, these are all the main provisions. Yes. Yeah, there are, to my knowledge, no, but we may find some case laws. Yeah. No, it need not be. It can be severally also. Can be severally also. It need not. It's not that. Correct. 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 I got your point. Yes, there is a point of argument there. You're right. Okay, we'll move. Okay, next provision as far as rights issue is concerned. Notice referred to in subclause 1 of clause A of subsection 1 shall be dispatched. This is very important. Earlier it was more stringent as far as this section is concerned. Now they have relaxed a little bit where people can take little shelter under these provisions. Earlier, the mode of dispatch of rights issue offer letter was only through electronic mode, courier, only this much speed post, where we should have the proof. We cannot create the proof. Okay. So later on, it is relaxed. Now, this letter of offer of rights issue should be dispatched through registered post, speed post, or through electronic mode, or courier, or any other mode having proof of delivery to all the existing shareholders at least 3 days before opening of the issue. So you can say, I have given it by hand, and you will take a signature that received on this date. That also will be proof of delivery. So to that extent, it is relaxed. So nobody should ask for, give me the, when you have sent the offer letter, when you have sent the courier, give me the receipt. If you don't have that, yes, sometime situation demands that we cannot send it physically through speed post or courier. Hardly same shareholders, same directors are shareholders. They will be in the same meeting. So you can just take the signature that I have received it on so and so date. That itself is the proof of delivery. Okay. So this is what, as far as the dispatch of notice of offer of rights issue is concerned. So at least 3 days before the opening of the issue means starting off that 7 days, 15 days, 30 days, whatever it's concerned. That is the date of opening of the issue. It should be sent well in advance, 3 days advance, so that by the time it reaches them, they will actually have that much days to decide or pool the money to invest. Okay, so that is the intent. Of course, there is a further relaxation given for private limited companies for this 3 days also, and for 7 days also there is a relaxation given that I will just cover it. Yeah, this is what, yeah, the recent amendment in rules, this is what I was mentioning. The notice under subclause 1 of clause A of subsection 1 of 62, for the purpose of these clauses, time period that 15 days has become 7 days through these rules. This is applicable for all the companies. For a private limited company, we have one more extra advantage. This 7 days also can be relaxed. Everything can be closed in a day if everybody agrees. So that provision is, in case of private company, subclause 1 of clause A of subsection 1 of subsection 2 of section 62. Following proviso shall be inserted. So it is for a private limited company special exemption, where if 90% of the members of a private company have given their consent, 90% of the members of the private limited company have given their consent in writing or in electronic mode, the periods lesser than those specified in those subclauses, whether it is 3 days opening of the issue, 7 days, minimum 7 days offer period, those periods can be relaxed. Okay, so you can say today itself, now the board meeting, now the issue opens, tomorrow issue closes. You can do that if all the shareholders agree, not 90% of the members. Okay, so this is possible for a private limited company. Ease of doing business, there are many relaxations which were given for a private limited company. This is also one of that. Okay, clear? Any doubts so far? If you have any questions, you can ask. Otherwise, I'll move to next slide. Okay. Okay, rights issue. As I said, rights issue as a whole, if you consider, it is not just receiving money, filing pass 3, issuing share certificate, updating register. It's not just that. It is a whole process where it starts from board resolution for issue. That is the first point. Yeah. Yeah, after board resolution for issue, here, this is for equity shares board resolution. If you do rights issue of preference shares, there are additional compliances which are required to be met. Section 55 read with rules. As far as issue of preference shares are concerned, there is a requirement of shareholders resolution. Special resolution is required. There are details to be mentioned in the explanatory statement as per the respective rules. So there are additional conditions to be met. This is simple equity shares rights issue. These are the provisions. Board resolution, then you have to issue the letter of offer. As I already explained, in that manner we have to issue letter of offer. Then letter of offer also should contain, as I said, there is no format as such, we should design a format to capture the process. So that letter of offer should also have response letters. If you are declining, what format you have to give. If you are accepting, what you have to give. If you are renouncing in favor of third party, what letter you have to give. So these formats, response sheet, what you call, that also should be attached along with rights issue letter, so that shareholder can opt whatever is applicable to him, whatever he chooses to opt, he can send that to the company. So letter of offer is given. If he is declining the offer, the letter of decline should be received from the shareholder that I decline the offer. If he is accepting the offer, he should give letter of acceptance. If he is renouncing the rights in favor of third parties, he should give letter of renunciation, mentioning the name of the person in favor of whom he wants to renounce the rights. Then next is right of reoffer, letter of reoffer. So this is not mentioned anywhere. So for example, now all the shareholders decline the offer. Now board will get the right to dispose of those shares to third parties. Then how will you communicate to them? So as a documentation, you cannot say orally we discussed, that kind of things will not be right. So there should be another letter which we should have to give it to those third parties, mentioning the reason. So based on the board resolution or shareholder resolution dated so and so, we had approved a rights issue. Subsequent to that, the letters of offers were issued to existing shareholders. All the existing shareholders have declined the right to accept the offer. In view of the above, we want to offer these shares to you on the same terms, on the same issue price. If you are interested, please accept the offer and remit the share application money. So that reoffer letter should capture that. So that is a communication to the third parties. Then from third party, you have to accept the acceptance letter. Then you have to receive the money. Then you have to pass a board resolution for allotment of shares after receipt of money. Issue share certificates within 60 days from the date of allotment by payment of applicable stamp duty, updating the statutory register, register of members or other registers as applicable, filing of PAS 3 with ROC within 30 days. So these are all the broad steps which is covered under rights issue. Okay. Of course, there are few points which are not mentioned in these provisions. For example, within how many days of receipt of money shares should be allotted? This is the main question under any allotment. Within how many days? 60 days. That 60 days, as far as rights issue is concerned, is not captured in these provisions. It is coming from deposit rules. So in the deposit rules, you cannot share application money beyond 60 days. So drawing reference from there, all the allotments should be done within 60 days from the date of receipt of money. Okay. So that is applicable for this also. Okay. Clear? Any doubts? Yes, please. Yeah. 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 I got your point. So that is a mistake. So as far as process is concerned, in some cases, though it is not a set or given process, if you file another pass 3 with correct number, it will capture the right data. That is possible. But as a right process is concerned, there is a request form which you have to file with ROC, which is in GNL 1 you have to file. To making the earlier form filed invalid, ROC has the power to cancel that form. It will be removed from the system. There is a process. After that, you can file the revised pass 3. If you are within the due date, it is good. If it is beyond the due date, related delayed consequences will come. But that is the process. ROC is entertaining many such applications on this mistakes, but it is not that easy. Of course, it takes time, its own time to do that, but that is the right process. No time limit. They can take their time. Yeah. It is. That's why it is. That's why while doing only, it is. I know the challenges which we as a practicing company secretaries face, which you as a chartered accountant face. Sometimes you have to rely on our assistants, trainees, articles. Sometimes these human errors do happen, but we have to be meticulous. And in law, there is nothing like human error. Intention is malified intention we have. There is nothing like that. Error is error, mistake is mistake, and it has to take its own course to get it rectified. Okay. Okay. So yeah, few FAQs I'll just go through before I move to private placement. Can debentures be issued through rights issue? No, because it uses the word further shares. So debentures cannot be issued under rights issue process. Can preference shares be issued? Small typo, excuse. Can preference shares be issued under rights issue? Yes, it can be issued. In case of rejection of rights issue by existing shareholders, can an outsider come in as investor? I said yes. So board has to decide whether how it is not disadvantageous to shareholders and the company. Okay. Loan payables be converted using rights issue route without complying section 62 subsection 3. So this is many cases we come across this scenario requirement or whatever. Director would have given some loan to company. After some time, they take a decision that I'll convert it into capital. Company will not have money to pay it back and we take it back. Okay. Then when we say conversion 62 subsection 3, there is a requirement. I'll just move so that I'll just come back. Okay, so 62 subsection 3, where if any loan to be converted into equity, it should be previously approved by the shareholders while giving loan only. So in this director's loan and all, where we will take the approval? Nobody will take the approval that this loan will be converted into equity in future. It's all afterthought. After some years, they feel that I want to get the equity for this. When some investors comes, that point in time, they want to increase their stake. So in such scenario, 62 subsection 3, we cannot comply because earlier shareholders approval was not taken. Special resolution was not passed. MGT 14 was not filed. Those things we cannot comply. Can we convert that loan into equity under rights issue? Also, there are sometimes salary payable. Salary is due to director. Company is not having cash flow to pay the salary. They want to convert it into equity. Like that, there are many scenarios we come across. So in my view, it is possible. It is possible because allotment of shares against any debt due is allowed. It is allowed. Allotment is allowed. So here also in the rights issue process, it is possible. All the process we have to follow. At the time of acceptance of offer, he should make a mention in the acceptance letter that I accept the offer towards share application money which is payable by me. Please adjust the loan outstanding in my name towards share application money. So that statement, if you take, then necessary accounting entries you can pass and you can allot the shares. Still it is possible. Yes, still it is possible. Yes, exactly. So instead of taking money, you have to take that declaration to adjustment or set off of the loan as share application money. Necessary accounting entry, I don't have to tell on that. So that is possible. Okay. Of course, this is debatable. Okay. But in my view, it is possible. Come again. Yeah. 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 No, no validation. So ultimately, suppose if 10 lakh is outstanding as on 31st March, and for that 31st March, you have filed DPT 3. Subsequent year, you have converted that 10 lakh into equity. Next year, that amount will not come. If half is allotted, half will come. So it's just like that. So there is no such validation. Yeah. Okay. So next, should the application money be paid within the offer period? If not, within how many days, months, shares should be allotted? So this is one more argument as far as rights issue is concerned. For example, lesser days is allowed in a private limited company. Let us say maximum is 30 days. So let us say our shareholder, existing shareholder, he wants to subscribe to the offer, but he is having some financial, he don't want to dilute his shareholding. He's very particular about his stake. I'm holding 50%. I continue to hold 50%. I want to subscribe to the offer, but maximum offer period is 30 days. Then I am not able to adjust that money within 30 days. I have some commitment. I have some practical issue. Can I say I accept the offer, but I will remit the money after 30 days, after 2 months, after 3 months, after 6 months? Is that allowed? Is the question here. Or it is that within 30 days, you have to accept the offer. Along with the offer letter, you have to give the check. You have to make the remittance, NEFT. So that is the question here. This is also, in my view, there are many experts are of the view that yes, it should be within 30 days maximum. That is the maximum time limit allowed under rights issue. Within that, you have to bring in the money also. You cannot bring the money after this. But my view, it should be possible because we see this as a easy provision as far as issue is concerned. When the private placement itself allows you, preferential allotment allows you to do the allotment up to 1 year. In the preferential allotment route, the special resolution passed for preferential allotment is valid for 12 months. That means within 12 months, you have time to bring the money. When that itself allows 12 months, why we have to interpret in this as 30 days? So we have done only thing, acceptance should be done within 30 days. Money can come later, but ideally it is better if it is specified in the offer letter. You bring the money within 60 days, 90 days, whatever it is. Reasonable period. Otherwise, issue will be open always. That should not be the scenario. Okay? Clear? I'll just move to next question. Yeah. Is there a requirement of valuation in rights issue process? This is one of the important question. So as far as rights issue to our domestic shareholders, residents are concerned, rights issue will not mandate any valuation. Will not mandate any valuation. In case of non-residents, there is a requirement of a valuation under FEMA. That is a separate requirement where valuation should be done by merchant banker or a chartered accountant. But as far as income tax laws are concerned, unless you are exempted under 56 from angel tax provisions for a startup, then there may be a requirement of evaluation to justify, because as you are aware, there will be many cases pending in this because of the shares are issued to under rights at a value more than the actual price. Shares are issued at a higher price when your fair value is very less. The difference will be treated as income in the books of the company. So to justify that, even though valuation is given by a merchant banker, there are it is not accepted by the assessing officer. There are many such cases pending even now. Okay, so that's why if it is to a domestic shareholder and if there is no exemption under 56 for a startup, then it is better to get the valuation done by a merchant banker so that you can satisfy your income tax authorities also. Okay. Next, within how many days from the date of receipt of share application money share should be allotted? This I already explained, 60 days. Is there a need to receive share application money into a separate bank account? No. Under rights issue, there is no such requirement. It can be taken to your normal bank account. So there is no restriction that you have to open a separate bank account or receive money in a separate bank account. There is no such restriction here. Next, can a shares under rights issue be partly paid? This is also, there is no clarity as such, but yes, it should be possible. There is no issue with that. Rights issue of partly paid shares is possible. Letter of offer should give explanation, call, when the next call. So all these details it should give, but it is possible. Okay, so these are all the many main questions which we come across. I have just covered. Next is rights issue of preference shares. As I already said, if it is a preference share, there is section 55 and rule 9 of share capital and debenture rules. There is additional compliances, including special resolution, disclosures in the explanatory statement under 102 and filing of MGT 14. So there will be additional compliances as far as issue of preference shares under rights issue route is concerned. Okay. Non-resident. Yeah, a rights issue under non-resident under FDI, there was a challenge. Now things are settled. Only thing is, I don't want to cover much on that. Only thing, as you know, rights issue under FEMA has a advantage because pricing guidelines are not applicable for rights issue under FEMA. So if you are doing a rights issue wherein existing shareholders are not subscribing and third party shares are getting allotted to third party in this process. In that scenario, the advantage, which is non-applicability of pricing guideline, is not available for that scenario. So in that case, valuation is must. So the valuation, fair value, whatever is determined, issue price should not be less than that. Okay, so that condition is applicable in that scenario. If it is rights issued to existing shareholders in their existing proportion, there is no pricing guidelines which is applicable, so you can take exemption. This is the only thing which I want to highlight under rights issued to non-residents. Okay. So angel tax exemptions for startup I already mentioned. So requires planning to mitigate tax risks because sometimes we advise ignoring income tax provisions. Then after 1 year, then there is an issue. I have seen many such cases. And if it is a high value transaction nowadays, I think immediately you will get a notice from income tax department stating that please explain the details of the transaction and all. We have seen many companies have received nowadays. So always it is do a proper planning as far as taxation is concerned. Yeah. No, they will, our experience, we also tried in many cases after DIPP, there are two add-ons we have to do, 56 and 80A or something. Yeah, so there we have, they will not simply give, In some cases, they say it is too early. You don't have financial statement also. New companies, even if you don't have first year financial statement, they have rejected, stating that uh, it's too early to give the exemption. Please attach first year financial statement, something like that they have said. So it is not so automatic. Yeah. Okay. Okay. Next, I will just try to cover preferential allotment and section 42 as ROC insisted me to touch upon that because of the severity involved. So next is section 62, 1B. So I just copied subsection 1 intentionally because of the flow you can understand easily. So next is first is rights issue. Then next again, wherein at any time a company having a share capital proposes to increase its subscribed capital by issue of further shares, such shares shall be offered. This is a repetition of rights issue. Next B is, first option is rights issue. B is to the employees under a scheme of employee stock option subject to special resolution passed by company and subject to such condition as may be prescribed. So this, there is, they have carved out a provision for ESOP. ESOP, this procedure of rights issue or preferential allotment is not required. If you approve a scheme of ESOP, special resolution is general provision. If it is for a private company, they have given ordinary resolution. There is a change in that. So that is ESOP. ESOP is separate. I don't want to dwell upon ESOP now. So next is same clause, C. A is rights issue, B is ESOP, C is preferential offer. So here also it is the same. If you are increasing subscribed capital by issue of further shares, here I have highlighted because there is a twist in the rules. I will just touch upon that in the later stage. Such shares shall be offered to any person. He need not be existing shareholder. To any person you can offer under preferential offer if it is authorized by a special resolution, whether or not those persons include persons referred to in clause A, which is existing shareholders, clause B, which is employees, either for cash or for consideration other than cash, if the price of such shares is determined by the valuation report of a registered valuer, subject to the compliance with applicable provisions of chapter 3 and any other conditions as may be prescribed. So this is the provision which talks about preferential offer. So you can offer it to third parties, including existing shareholders, including employees, for cash, consideration other than cash, and here valuation is must, and it is mentioned in the section only. Valuation of a registered valuer. There was a relaxation period till some point in time where chartered accountant having 10 years experience was allowed to give this certificate. But later on, when registered valuer rules were implemented, now it is registered valuer. Okay. So this is the section which talks about preferential offer is concerned. Then rules. So section is very precise, very compact. But rules are more as far as preferential issue is concerned. Section rule 13 of share capital and debenture rules talks about preferential offer. Sub-rule 1. So for the purpose of clause C of subsection 1 of section 62, if authorized by special resolution passed in general meeting, shares may be issued by any company in any manner whatsoever, including by way of preferential offer, to any person, whether or not those persons include. So it is again for existing shareholders and employees. And such issue on preferential basis should also comply with conditions laid down in section 42 of the Act. So this is again regulation by reference. So preferential issue means, any question? Yeah. Preferential issue means we have to follow preferential issue rules also. And there is a condition that you should also comply with conditions laid down in section 42. So when it is preferential offer of shares, it is preferential offer plus private placement. There cannot be any preferential offer without private placement. Okay. So that is what I have highlighted this portion. Should also comply with condition laid down in section 42. Section 42 means section 42 read with rules. I cannot comply only 42 section, leaving the rule 14 of prospectus and allotment of securities rules. That I cannot ignore. It is section 42 and rules. So when it is a preferential offer, section 62, 1C, rule 13 of share capital and rules, share capital and debentures rules, section 42, rule 14 of prospectus and allotment of securities rules. So these are all the 4 set of provisions we have to comply as far as preferential offer is concerned. There is an exemption for that also will come. Okay. This is the exemption in case of any preferential offer made by a company to one or more existing members only. One or more existing members only. The provisions of sub-rule 1 and proviso to sub-rule 3 of rule 14 of the company's prospectus and allotment of securities rule 2014 shall not apply. So here also they are not giving complete exemption from 42 and rules. They're giving one part of that rule, which is again very confusing now. While this exemption was given, the provision of rule 14 was different. It was in different order. Now subsection, sub-rule, everything have changed. So now there is confusion. This sub-rule 1, proviso to sub-rule 3, they were referring to earlier erstwhile provision rule 14. Later on, everything is revamped. Now, if you refer to this section, it makes no sense. So ideally, the settled view is exemption was given from filing of pass 4, preparing of pass 4, giving offer letter. That was the section where the exemption was given. To that, it is applicable, even though it's not applicable. Though if you literally see, it is not matching. Okay. So next. So price of shares to be issued on preferential basis by listed company shall not be required to be determined by valuation of registered value. So listed company, there is no requirement of a valuation by registered value. Okay. Okay. So here there is a twist. As far as section is concerned, it says shares. It says shares. So preferential offer, can it include other securities? Is the question here. There was some rule earlier that section cannot rules cannot override the section, such kind of thing. But now in many places, this is not the scenario. Section says something, then rule says something. So here in the section, they have used shares. But here they said preferential offer means issue of shares or other securities. They have extended. Okay, they've extended that scope. They have included other securities also. And they have covered equity shares, fully convertible debentures. Debentures also they have covered here. Partly convertible debentures. Any other securities which would be convertible into or exchanged with equity shares at a later stage. So all convertibles they have covered. So this is only for the purpose of preferential offer. This reference we cannot take it for rights issue. So as far as preferential issue is concerned, we can do issue of securities, which includes debentures also. Okay, and other securities which are convertibles. So that's why this is little extended definition. Yeah. Come again? Yeah, correct. They have given the option. They have given the option. So I'll take 10 minutes, okay, so that I can conclude. I'll just rush through because I know that paucity of time next speaker may be waiting. So, okay, so I'll just rush through now. So preferential offer, yes. Special resolution, there should be authorization in the articles of association. And yes, there are detailed explanation in the explanatory statement is required as far as section 102 is concerned. Any deviation, there are line items like if you see object of the issue, total number of shares, price, and basis on which price has been arrived along with report of the valuer, the relevant date, class of persons, intention of promoters. So there are like this, there are list of items which are given. If you skip one item also, it is violation of the provisions. Okay. So that's why this disclosure, whatever is there, line item, we have to put a table, and each table we should see that none of these disclosures are missed out. Okay. So that is the, even if you say explanatory statement is not applicable to my company, private company, I have taken the exemption under articles. Still, these disclosures, there is no exemption. Okay. General, there is a exemption from attaching explanatory statement, but this disclosure is specific disclosure we have to give. Okay. So I'll just, yeah, this is thing which I was referring. Allotment of securities on preferential basis made pursuant to special resolution passed pursuant to subsidiary rule shall be completed within a period of 12 months. They have given the timeline. Rights issue, that's why I said we cannot say 30 days we have to receive the money and in 60 days we have to complete the allotment. So this 12 months also, if another special resolution is passed, then we can complete allotment thereafter also. That provision is also there under preferential allotment. Okay. Again, registered valuer. If you are allotting shares for consideration other than cash, then there are two sets of valuation is required. One is valuation of shares, then valuation of consideration. So two sets of valuation is required. They have to match the consideration and the price of the shares. So that's why separate valuation certificate should be attached. Okay. So this is the clause where your question is, if the convertible securities are issued, then you have the option of choosing the valuation at the time which shall not be earlier than 30 days from the date when the holder of convertible security becomes entitled to apply for shares. That is at the time of conversion. Okay. There also valuation is required, and upfront also you can do at the time of issue of shares also. No. Exactly. You have to choose the option. So company shall take a decision on subsection 1 or 2 at the time of offer itself. If you are saying I will do the valuation at the time of conversion, you can take that route also. Okay, but under FDI case, there is a challenge, practical challenge we have. Generally, we choose at the time of issue only. Okay. Okay, this accounting entry, it is talking about if it is for consideration, how accounting entry should be made. So price again should not be less than the price determined by the valuer. So earlier there was a confusion. It says determined by the registered valuer valuation. Can it be less than or more than? Slight variation. ROC also objected. If the valuation was this much, there was a double the price, issue price. We said it is allowed. FEMA also allows. If the valuation is 100, we can issue at 1000 also. No restriction. ROC was objecting. So this clarified. So it is not that it should exactly as per the valuation report. It can be more than the valuation, but should not be less than the valuation price. That is the intention. Okay. Now come again. Yeah. Yeah, that is. Yeah. So that is there. That is there because this chartered accountant, merchant banker, and registered valuer. 3 agencies are allowed to do the valuation. Different, but that is not advisable because at some point in time it will be objected. It will be objected because in all the cases, if you follow the same parameters, projections, and of course, judgment can be different in discounting factor or whatever. That is the only thing if I know. If you can justify, fine. But if there is a challenge in justifying, then of course, the turnover number cannot be different for 3 valuation. The base material should be same, right? But of course, it's based on the justification what you can give. No bar, no bar, no bar. Yeah, because ultimately valuation under current times, it is individual judgment. It is not that book value method where it will be all common. Okay. Okay. So I'll just private placement because this is what he wanted to cover. That itself, I'm just falling short of time. I'll just close this. Okay. So when it is preferential allotment, it should be linked with private placement. That is how it should be read. So private placement is section 42 subsection 1 and read with rule 14 of prospectus and allotment of securities rules. Okay. So in the private placement, I'll just touch upon few important points. If you are issuing only debentures which are non-convertible, there is no convertibility option in the debentures. Non-convertible debentures, NCDs, then you can do it under only section 42. You don't have to route it through section 62 because it is not security or it is not share as defined under that section, read with rules. If you are doing NCD, only section 42. If you are doing shares or other securities, then 62, read with section 42. Okay. This sender I'll skip. Okay, this receipt of money. Important points only I'll just cover. You have to receive money under private placement either by check, demand draft, or other banking channels, not by cash. This is very, very strict. In the rights issue, there is no such condition, though it is always better to follow. But here it is clearly mentioned. Demand draft I have highlighted because there is a requirement that company should keep the record of bank account from where the money is received. If you receive demand draft, how will you know the bank account from which it is received? So that's why I have highlighted. There is little contradiction there. Okay. Then next condition is company shall not utilize money raised through private placement unless allotment is made and the return of allotment is filed with the ROC. Rights issue, there is no such condition. Here, after receipt of money, you have to file PAS3 within 15 days, not 30 days like rights issue. Here it is within 15 days, you have to file PAS3. Before filing PAS3, we should not touch the money. Okay, this is very, very important. So that is why we have to keep the client informed that I will confirm before you draw the money. Okay. Yes, sir? No, no bar, no bar. That is again, yeah, possible. But I don't know how it will be proved. Yeah, but possible. Yeah, somebody may object, but always it's better to complete the allotment immediately after the receipt of money. Nothing stops. Money is there, just filing PS3, and then you can play with money, no issues. Okay. Okay, this and all I'll just skip in the interest of time. Again, 60 days has come here in the section rules itself. company making offer or invitation under this section shall not allot securities, shall allot its securities within 60 days. Clear. Here is clearly mentioned in the rules. Rights issue, it is drawn from deposit provision where there is a restriction beyond 60 days. Here it is clearly mentioned 60 days. Beyond 60 days, we have to 12% penal interest we have to pay. That is there. Separate bank account, I have already explained. Always it is better to open a separate bank account for this purpose and take the money into that account. After filing of PS3, you can use the money. You can take it to your normal account and you can use the money. Okay. 15 days, very important. We say 30 days past 3, we will drag it. But private placement cases, 15 days. Okay. Okay, so this penalty provision is very important, as he already mentioned. One is, if company makes an offer or accepts monies in contravention of this section. Okay, whole section, any deviation, it is in contravention of the section. Then company, its promoters and directors shall be liable for a penalty which may extend to the amount raised through private placement or 2 crore, whichever is lower. This is the penalty provision. On top of it, company shall also refund all monies. Okay. As he said already, he says he sent a notice that whether they have refunded the money. Okay. So this severe, these provisions are. So that is why it is very important that all the compliances are met. And when you are giving your CARO report, you have to see that whether company has followed all this. You should also report that these are all the compliances which the company has made. Okay. Yeah. So here also, when we do preferential offer of shares, explanatory statement should cover 2 things. One is disclosures which are mandated under Rule 13 of Share Capital and Debenture Rules, plus Rule 14 of this prospectus and allotment of securities rules. Different, sometimes it is common, object of the issue is there in both. But always it is better to put 2 tables under Rule 13, under Rule 14, all the disclosures separately, even if there is a repetition, it is better. Okay. Plus, if it is preference share, another disclosure under 55 rules. 3 tables should come as far as disclosure in explanatory statement is concerned. Okay. Yeah. So as far as NCDs are concerned, there is a provision that special resolution is not required. If you pass a resolution under section 179(3), which is a board resolution, that is sufficient. You don't have to pass special resolution for private placement of non-convertible debentures. Okay. Okay. So next is, there is a, as I said, private placement offer letter. Rights issue, there is no offer letter as far as provisions are concerned. Format is prescribed, but under private placement, Form PS4 is prescribed. That is the offer letter, which contains lot of details, very detailed one, self-explanatory. That should be prepared and sent to the investor. Before sending that, the special resolution or the board resolution in case of NCDs should be filed with ROC in form MGT14. Only after filing that MGT14, you have to send the offer letter to the investor. That is the one more condition they have put. Okay. Then PS5, there is a record of private placement. We have to keep, that should be attached to your PS3 also. Normal PS3, there is no such requirement. Private placement, if you are filing PS3, you have to attach PS5 also. Okay. So this bank account, as I said, there is a requirement that if you are offering shares to X, the money should come from X only, from his bank account. There cannot be, there are some cases, in case of non-residents, there will be investment managers. Sometimes all shareholders agreement, everything will be signed by one person. He says money will be sent by my investment company. There is one company, when we say FIRC, there will be different name. Then we said, please refund and get the money from the same person, because there is a condition. It cannot be a deviation. Okay. Okay, so list of allottees under rights issue and private placement, there is a slight deviation we have to keep in mind. Private placement, list of allottees requires PAN also to be mentioned, email ID of the security holder also to be mentioned. In the normal scenario, there is no such requirement. So that is one thing which I want to highlight, because small deviation also violation of the section, having severe consequences. Okay, so that's what I wanted to highlight here. And board resolution I already mentioned. In case of NCDs, board resolution is sufficient. There is no requirement of passing special resolution. That itself should be filed with ROC. Yeah. Okay, these are all the provisions. I have come to last slide. So as I said, I wanted to cover section 42. And as you rightly mentioned, it is very, very important, and the cases are more nowadays. Adjudication of section 42 violations, it is in the news also. ROC Bangalore has raised a 2 crore penalty on this company. Such kind of 2-3 things you can see in the Google. It is there. Okay, so that's why this is very, very important. And when you are certifying in CARO that all the provisions of section 42 and 62 are followed by the company, you have to check all these compliances before you make an affirmative statement. Okay, if there is any deviation, you should make a point to qualify the report. And also, as a consulting, in the consulting role, when you are advising a company on private placement, these are all the provisions which you have to keep in mind. Okay, so with this, I will conclude my session, and I thank Srinivas sir and all the management committee members of Bangalore branch of ICAI, and all the patient listeners for your patient listening. Thank you so much. Have a wonderful 2-day seminar. Thank you.
Members, that was a knowledge enriching session, and I personally thank you, CS Vivek Hegde sir, for covering nitty-gritties of practical aspects of issues of shares by alerting us that let us complete the procedure by complying all rules so that we avoid notices in future. As a saying goes, a stitch in time saves 9. On behalf of Bangalore branch of SIRC of ICAI, I thank CS Vivek Hegde sir for his session. And now can I request our MC members here, Rejo, to present a memento to the speaker as a token of gratitude and respect. Thank you, one and all. Now we break for tea and reassemble sharp at 12 p.m. for next session on related party transactions by CA KS Ravi sir. Thank you.